Wall Street expectations. Those numbers come as investors await the Fed's meeting next week as well. So joining us now is Torsten Slok, chief economist at Apollo Global Management. Torsten, it's great to have you back on Overtime. And let's start right there because you've joined us a few times now in recent months as we've seen soft data softening, and you've said, watch the hard data to see if it follows suit. We did not get that following of suit today with the jobs report. Your takeaway?
Well, I think a very important takeaway from this week is that we're beginning to hear in the anecdotes in the earnings reports that there are a number of things to worry about going forward. You saw PepsiCo point out that snack sales were lower. You also saw Chipotle saying that traffic was lower. You saw also Southwest Airlines saying that we are literally already in a recession. So when we look at this earnings season, I think the main takeaway is, first of all, that very few companies were able to provide guidance going forward. But what they actually did say was that a number of them were pointing out that the hard data that is coming is about to be a lot weaker. So we still think that we have a voluntary trade reset recession ahead of us, simply because of the very, very high levels of tariffs on China that are going to limit the 30,000 containers that normally come in from China every day, and therefore are ultimately going to result in empty shelves in U.S. stores.
Along those lines, I mean, what we can control, quote unquote, seems to be the phrase of earnings season. It's appeared in over 40 S&P 500 earnings calls so far this quarter. That's according to analysis from AlphaSense. When we talk about this voluntary trade reset recession, though, Torsten, what would that look like? Have we seen anything like that before?
No, we have not, Morgan, and this is really, really important. If you think about what normally generates a recession, for example, in COVID, we got a recession and it took time because we needed to invent a vaccine. The previous recession was Lehman Brothers. It took time to clean up after the banking sector and the housing market and the household sector. And the prior recession to that was the IT bubble. And the IT bubble also took some time to get out of after the overinvestment into Y2K. So this time around, we have just not seen anything like this before, where we had a sudden abrupt halt in trade between China and the U.S. So the consequence will be, first, of course, the ships and the vessels that are on the way will no longer be of the same numbers that we've seen earlier. The trucking industry already through this earnings season has been saying that there are issues. So when we get into later this month and the beginning of next month, we will begin to see ultimately that there are a lot of things, including prescription drugs, that we get 90% of prescription drugs that we consume in the U.S. come from outside the U.S. And China is a very important producer, for example, of ibuprofen and also of penicillin. So that means that they will have an impact in so many different ways that will be coming in the next several weeks.
So, Torsten, you're the third guest in 15 minutes here on Overtime saying the hard data is about to get bad. Why isn't the market pricing that in?
See, I think the market is exactly, John, to your point here earlier, is just looking at this past earnings season and say, hey, it's actually not too bad. And it may be that if we get deals very quickly, that this could all go away. But the issue is that these deals would basically have to involve a dramatic decline in tariffs. So the risk we're really facing here is that if we do not get tariffs to come down, including in particular, of course, on China, there is a risk here that over the next several months, we might not even have fireworks for the 4th of July. Remember, 95% of the fireworks that are imported into the U.S. come from China, and 90% of fireworks that are consumed in the U.S. comes from other countries. So it could really be that in the next several months, like Scott Bessent was saying, it is an unsustainable situation. We're going to realize suddenly in areas where no one really had looked before, what are the consequences of these extremely high levels of tariffs on China.
If I'm not mistaken, that first week in July is also pretty close to the 90-day deadline that we're looking for. So is that a moment that the market should look out for in early mid-July if there isn't some ink on some deals by then?
Well, that's the 8th of July, and I'm trying to come up with a song that fits with Tina Turner here to what your previous conversation. But I do think that there's a lot of issues going into this around. We simply don't fully understand in the market what's actually coming. And the bottom line here is that I do think that if we have, and again, the recognition by Scott Bessent and others that this is unsustainable. We also had Steve Moran saying the same thing earlier today. I do think that it brings us to the conclusion that we should still expect this to be a voluntary trade reset recession where the slowdown coming into the summer could potentially be very significant.